Hope you're all doing well. It's Thursday afternoon. What a day. Micron held firm, doing well. Meanwhile, Mag 7 stocks, Bitcoin, software remains under pressure. We were just listening to David Bowie's Under Pressure. Thought it was fitting for the theme, Under Pressure. My view, not David Bowie's best work, but people seem to love it, so hey, there you go, Under Pressure. Few observations. If you look at the analyst estimates for free cash flow growth for Microsoft, Meta, and Google, they're essentially zero for the next 3 years, and then they jump suddenly and dramatically. In the case of Microsoft, it jumps around 100%. So the CapEx payers are handing over a lot of free cash flow to the CapEx receivers. Micron's obviously a beneficiary of that. Guess which company has the second highest year-over-year free cash flow growth expectation for next year? That company would be Micron. Which company has the most negative free cash flow growth year-over-year for 1 year? That would be Meta. The company that has the most free cash flow growth year-over-year is like a used car dealership of all things. By the way, there's some interesting companies at the top of that list and interesting opportunities on the bottom of that list too. So you need to do more than look at one summary statistic. But I thought that would help make sense of what's happening. There was a time in 2022 when Meta went nuts spending money on Reality Labs, and the stock got down to, I think it was like a 12 times PE ratio. Just got extraordinarily cheap. They cut spending, and then that lifted. Okay, the name went up 400, 500% in the next few years or so. I wonder how long this continues, because the hyperscalers, on the one hand, they have a strategic objective to win the race for AI. Like, they're looking at Anthropic and they're very, very concerned, and they should be concerned. It is highly disruptive technology. It's very disruptive technology what's happening. I had an FSD video last week around 5 ways we're using AI to transform our sales process, and that is disruptive to companies like Salesforce, okay, for example. So on the other hand, shareholders want returns, and they're gonna have pressure from that too, and it's harder to attract talent if your stock price is under pressure, okay? But until they show return on that CapEx in the form of free cash flow tied to the CapEx, they'll remain under pressure. Now, their difference is if you have a cloud business. If you have a cloud business, they are getting ROI on that business, okay? So the issue is that they're spending more in CapEx to create more cloud capacity. I think if you own these names at these levels, you'll do fine. It's a question of time horizon, because they are great businesses, and a name like Microsoft has extraordinary enterprise distribution and vendor lock-in and policies and compliance tools and all this rest, right? So there's a lot of news around the free cash flow. I think that's baked into it. On the other side of it, though, the spend on semi is going to continue for a couple of years. I mean, the intention is there. The max spending on Micron, max revenue growth for Micron, I read was 2027, which is about, that's like next year. Markets look forward about 6 to 9 months or so. So that's not too far off in the future. It's something to keep an eye on also, right? So the tensions between semis and software, it's not a bad idea to add to winning positions and trim a little bit from losing positions too, and just adjust. That's reasonable. You know, on the Micron side and what to do with that, a good rule of thumb to stay in these names and trends, here are 2 rules of thumb. One is, don't trim until you have at least 2 red bars in sequence. Okay, we did a study on this thing, and that decision rule looks effective. You'll get 1 red bar that could be a simple shakeout bar, bounces back the next day. Look for 2 consecutive red bars and a strong momentum rally. The second is, wait for the trend to break. We actually haven't seen that in Micron. Haven't seen that in SanDisk either. Okay, you are seeing sloppiness though in Semiland when other names that don't have nearly the same free cash flow or earnings growth are going up because of their thematic membership, right? I'm in Brooklyn, by the way. This is Mamdanistan, I guess. Is that Mamdanistan, Brooklyn? I don't know. I think he was in Astoria, actually. Maybe I'm not there yet. So I had a breakfast with a family office. First off, 3 minutes on how people have created wealth in interesting ways. I'll give you a few examples just to open your eyes up to different opportunities, right? Okay. These are all $100 million to $1 billion plus family offices, okay? 1, light bulb manufacturing. Light bulb manufacturing, very boring, pedestrian, okay? 2, furniture manufacturing. 3, multifamily real estate development. This one comes up time and again, by the way. Multifamily real estate development. I've mentioned this before. Like, go learn how to build homes, solve housing shortage issues. You'll get paid. You can actually take a company public off that. Okay. This family was an investor in the UFC, and they exited that for a considerable sum of money. It's fascinating. So there are a lot of ways to make money. They made that investment because they had a family relationship with the founder. They went to high school together, actually, of all things. So it's better to be lucky than smart. Serendipity can play a role in these things. And surrounding yourself with a good peer group matters. To that end, by the way, we're having an event at another New York City penthouse, beautiful views, great vibes, catering, next Tuesday evening. I'll post a link if you guys want to join. Feel free to. It'll be in New York City. Okay, so those are some thoughts there. What else? I posted a couple interesting things today. We've been integrating data on politicians and doing some analytics. We created the first of its kind politician leaderboard to see who creates the most alpha. John Fetterman takes the top of the list. 4 out of 5 on the list are Democrats. How about that? Nancy Pelosi was the leader, right? Once upon a time. John Fetterman leads, up 50% in the last 3 months. We impute the returns. We assume that their disclosures, that they maintain the position in between and all the rest. So same thing we do when we analyze kind of hedge funds too, but kind of fascinating to see that. Also, Ro Khanna, interesting individual. So he covers Silicon Valley. He is one of the most prolific traders in Congress. Thousands, like 13,000 trades we see in our database from Ro Khanna. Okay. It's actually difficult to analyze his portfolio because he submits his statutorily required trades in paper. So we have to OCR this thing. Okay, so why do you think he does that? Why do you think he submits it in paper? Clearly the guy covers Silicon Valley as tech forward. I have a suspicion why he might want to do that. Maybe he wants to make our job more difficult to analyze it, right? Transparency and accountability go hand in hand. I'd be very curious to see what he's doing there. So stay tuned for that. Politicians are influencers too, and this is an animal spirits, momentum, trend-driven market. Look at Trump's portfolio. Insider trading does happen. Congress should be prohibited from doing all this stuff, but they're not. So take a look at it. That is one module in our app, by the way. We disrupted some other company that solely focused on this thing, and our engineers who are aces just built this thing, and we're going to do it better because we're going to add data science and insights to this thing too, and overlays, because we're investors first, and so can you wrap that data with insight analytics, right? Here's another one. Josh Gottheimer. First off, he's one of the wealthiest members of Congress. He's think 160 million disclosed assets. His sell timing is phenomenal. The guy sells and the stocks is dropping. He was selling like in April or so. This is after the Strait of Hormuz correction. Okay, he sells, things drop. Sells Verizon, drops. Sells AT&T, drops. Okay, that's impressive. That's pretty impressive. So he's another one to watch too. So should download the Lumida Invest app. Go to lumidainvest.com or type in Lumida Invest, 2 words, and you'll see that. And then click on politicians. Rolling out another big release this Tuesday every week. Okay. So some thoughts real quick on title this is Not in My Backyard. Before I get to that, I want to take a moment to talk about just some of the election outcome in New York City. It was Democratic primaries, but these will not be contested in a material way. So New York elected 3 Democratic socialists to Congress. How about that? Every few decades we have this. We had Huey Long in the 1930s in the Great Depression in Louisiana, who was to the left of FDR. He didn't think FDR was radical enough. You had the Great Society program. You had a kind of that in the 1960s. And then Bernie Sanders in 2016, of course, pushed the Democratic Party leftward. It's interesting about 2016, you had Trump and Bernie couldn't be more opposite from one another. So it speaks to greater polarization. A lot of what's happening here, I think, can be explained very simply. If you're a young grad in the 2010s, you got a lot of student debt, and you graduate and you can't get a job, and your entire life you were told that you were smart, you're doing the right thing, you're getting good grades, and you use a lot of big abstract words that no one understands. I went to one of these Ivy League schools. If you read the papers coming out of like sociology or anthropology, it is you can't make sense of them. Okay, you can't make sense of them. It's jargon. It's just loaded with jargon. Superstructure, this, that. All that started with Karl Marx back in the day. And the failure of both the far left and the far right is elevating ideology over humanity, right? The failure of the far right, take for example Nazi Germany, is imposing this concept of race distinctions or racial distinctions and using that to dehumanize or delegitimate a population. And the far left is the same thing too, of course. You've got this with China's Cultural Revolution, the Khmer Rouge, you're a political prisoner in Cuba, you're dead, you're wrong, you're on the wrong side of history, you're on the side of the bourgeois. The difference there is they're not making a racial distinction, they're making a class distinction. In both cases, the fallacy is to have an ideology, an intellectual framework, a hyperactivated intellect that's drawing distinctions between one human and another. That is where so much evil in the world comes from, is the reification of ideology. It's from making ideology real and enforcing the ego's concept of what it believes is a just future world, imposing that on others and causing great harm. I remember when I was 16, I was a socialist. I was like, gee, why can't you have a utopian society? I thought it was a math problem. We can just do the math and calculate. It just seemed intuitive to me. It takes a lot of the lessons of history and understanding a very important concept to get past that. And that concept is the lesson of incentives. People respond to incentives. This is what you learn in China, right? They demarcated these plots of lands and they gave everyone production quotas and people starved. They starved. What saves China is when people were privately and quietly disobeying the government, growing crops and trading with one another and specializing. And then when they finally introduced private property, then things started to work. Well, what changed? What changed is that you had a decision maker, which is an individual. The unit of a decision is an individual who bears the benefits and costs of their decision. And they have two things. One is they have a feedback loop, and second, they're representing their own interest. Their interest is not represented by a distant third party like a bureaucracy or central government or a political party that represents to make a better decision for them. That decision could be around a food choice, how they want to teach their kids, what schools they put them in, housing choices, and all the rest. Okay, if you go to Cuba, the housing there is just absolutely horrible. I mean, I have photos of this stuff. You can look it up in my feed. It's terrible. It's just they've destroyed capital. The capital base has no reinvestment. There's no owner of capital. Well, there is an owner. Everyone's the owner, which means no one's the owner. It's a classic case of the tragedy of the commons, which you learn in Economics 101. Okay, so that's the basic issue. The great innovation of the American Republic, it's worth talking about in the context of the bicentennial, was the Declaration of Human Rights, that there are inalienable rights that are self-evident. That term self-evident is a powerful word, because what it's saying is we have a concept of humanity or rights that are prima facie. They are at first sight. They are immediate, and they supersede the intellect. That was a great innovation in the American philosophical tradition, right? Which is actually grounded in a deep level of skepticism and humility in anyone conceiving the ideal life for anyone else. How interesting is that, right? The American Republic is premised on skepticism. Going back to Socrates, one of the greatest philosophers of all time, whose main thesis was, I know nothing. That was his main thesis. Probably a true statement today. I'm pretty sure we're in a simulation. I can't quite prove it. I'm pretty sure we are. But, so Socrates, Aristotle, there's a chain that continues to that American Republic, and it is the best approach we know, including markets, to how to govern and allocate resources that are scarce and make trade-offs. It's a lot better than ideology. It's a lot better than having a political party make choices, because we're in the wrong side of that political party. Bad things can happen, including the loss of life, liberty, and the pursuit of happiness. So, this car is going in circles. It's on autopilot now. All right. What else? So, not in my backyard. Let's get back to this topic. So, why are housing costs through the roof? There are a few reasons. We've talked to some before. One was quantitative easing. You push rates very low. You lock out the next generation. People bid up rate-sensitive assets, stocks, bonds, housing. That happened during COVID. And yeah, you get a housing bubble. That's one. Stocks and bonds corrected. Housing doesn't. It's harder to. It's stickier. Plus, you got a shortage, right? That's one. Two is just the supply of housing. The issue across the country is not in my backyard. That is the issue across the country. So homeowners, especially older homeowners, including senior citizens, the ones that have the time to go to the local council meetings, reject high density housing. Florida is a prime example of this. Florida, you can't develop in the Everglades. You got to develop on the coasts. Miami, Jacksonville, Naples. And you need high density housing. You got to build up. High density housing is associated with lower income housing too. Okay? And high density housing can potentially create pressure on house price appreciation. Okay? So that population doesn't want to see a decline in their home values and what they see as their quality of life. That's basically the issue. That's it. states and governors are aware of this, and they have programs in place to encourage development and incentives, but it's still extremely difficult to get local municipalities on board with that. It's very difficult, and it can be gamed. New Jersey has a lottery system for affordable housing, and it's designed for people that are meant to service the community. Firefighters, teachers, policemen, for example, who now have to commute an hour and a half to serve, say, downtown Miami because it's too expensive. And those systems get gamed. It's all about incentives. Okay, if you're making a resource allocation decision outside of a market context, it's going to get gamed. It's going to be who knows who gets the first call, who knows the mayor. Okay, it's going to be some other decision-making mechanism that has to do with influence or coercion of some type. That can obviously create risks of corruption too. So happens more often than you think. I talk to family developers who deal with this stuff, and you see the decisions they've got to navigate, how to get a project going. It's difficult, and these politicians don't have the best interest, in my view, of the people. Not always. They're mixed, and they're complicated, and there's grift. You help them raise money and you get a permit, that kind of stuff, right? So, or worse. Look at what Chris Christie did with the George Washington Bridge, right? I mean, that's just unfortunately what happens when you have non-market ways to allocate, right? That isn't to say that you don't have issues around inequality. Yes, there are issues, okay? But going in this direction is not the right direction. It's not the best direction. What else? So that's why you have expensive housing. It's not in my backyard concerns. It's the same reason why you don't have more nuclear energy. It's also not in my backyard concerns, right? So the enemy of progress is not in my backyard. It's like a public goods problem. We all have a shared interest in a better decision, but there's no local incentive. It's the same reason why New York City doesn't have Waymos, because you got this vocal group that's going to be economically hurt for a short period of time. Okay, market will create other jobs. There are other jobs now, right now. So you don't have to wait to create the job. That job's there, but they've got a thing going. They're vocal, and so now we can't have nice things like driverless cars. That's a version of this not in my backyard issue, right? All right, what else? How are things going? So it's summertime. We've got peak days, I believe, are behind us now, right? Or on the other side of the solstice. Hope you're getting your vitamin D. And I'm in New York tonight. So we've got an event next Tuesday, as I mentioned. Check out the link. I'll post it shortly here. Hope to see you there. Make it a great one. Good evening.